So far in this course, we've talked about the world of finance and financial lingo, placed it in the public sector context, and examined local government finance in some detail. In this video, we examine your role before, during, and after the financial year. We look at a typical financial year in the world of finance. From building up and agreeing the annual budget, starting the new financial year while closing down the old one, budget monitoring, and back into developing the following year's budget. The first thing to say is that this is a never-ending process. While managers and accountants work together to develop and agree budgets for the new financial year, they are, at the same time, monitoring budgets in the current financial year and thinking about closing the year down. Another thing to remember is that this example is indicative only. In your council, the timings, number of reports, frequency of reporting, etc. may well be different. Let's firstly draw a few simple timelines running from October, financial year 1, to the following March, still in year 1, then into year 2 from April to March, and finally into year 3, April onwards. We will now float over these timelines and stop at each point along the journey and talk about the highlights. The video will end with key things that you and your colleagues can do to ensure that the budget and close-down processes go as smoothly as possible and therefore increase the likelihood of spending and income coming in on budget. October year 1. As we are now 7 months through the year 1 financial year, the accountants are thinking about how much has been spent and collected in income to date and what is expected, forecast to be by the year end, March 31st, year 1. These are the projected outturn figures. This applies to both revenue and capital spending. At the same time, we're thinking ahead to the new financial year, year 2, and in particular, any capital projects like buildings, new vehicles, major software upgrades, etc. Accountants and managers will get together and thrash out the details. They may well have been prompted to consider any new projects earlier in the financial year when reviewing the medium-term financial strategy. The costs for these, both initial outlay and ongoing maintenance or support costs, will have to be considered. Cost estimates determined, all of which go into building the new year budget. Of course, most, if not all of these capital projects will have to be agreed by the councillors, as they will contribute toward delivery of the council's corporate plan for the longer term. November, year 1. Into November and December, the forecasting continues with the outturn figures being adjusted and reported accordingly. Income targets for year 2 now come into focus. The accountants will be looking to managers to review their services, fees and charges. For example, what will the car parking charges be in each of the council's car parks in order to achieve the council local transport and economy objectives? If the council runs leisure services, how much will it charge members of the public to use its swimming pools, sports fields and badminton courts? Will charges have to go down or, more likely, go up? The effect of any changes in fees and charges will be financially modelled and the impact on a services year 2 budget assessed. Thinking about capital again, have any projects that are already underway slipped? Are we expecting to incur expenditure in year 2? Will we have to carry forward any budgets from year 1 to year 2? Every council will have its own policy in respect of carry forwards. They may need senior officer or committee, councillor approval, or, if low enough, just be recorded and actioned. Spending on staff makes up a significant proportion of a local authority spending. Accountants will therefore be talking to managers about their expected staffing needs and therefore levels required to deliver services in year 2. Managers will be asked to consider the level of full-time equivalents, FTEs. For example, 2 members of staff sharing one job and working equal hours every week equals 1 FTE. In some councils, a service manager's list of staff, their grades, hours, etc. may have to be signed off by a senior manager as representing what is required to maintain the council's planned level of service. December, year 1. Again, outturn figures for 31st of March are adjusted and reported accordingly. The finance team get together and discuss next year's budgets. Finance officers, accountants, will usually be allocated a service or number of services to work alongside in developing their budgets and assisting them in budget monitoring throughout the year. They will get together around this time to determine the cumulative effect on the Council's total budget. How will this affect the Council tax charge for Year 2? Does the finance team think that the expected levels of net spending less income, can be financed, i.e., can the budget be balanced? Throughout the year, service managers will not only have to keep an eye on spending and income, the inputs, but also monitor and report on a service's performance. For example, number of missed refuse bin collections, hopefully not increasing, number of miles of road swept, time to respond to queries from the public, etc. These performance measures help senior managers and councillors gain a view as to how well or not a service is being managed. Matters outside the control of a service manager, of course, being taken into account. January, Year 1. Yes, you've guessed it, we continue to review and update the outturned figures. Will services and the council overall reach the end of Year 1 on target, i.e. within budget, or will they overspend? We're probably at the point where all that has been discussed before concerning Year 2 budgets, fees and charges, changes in staffing levels, capital projects, etc., all go into the pot out of which detailed service budgets come. These will be discussed by leading councillors, adjusted if thought necessary, and ultimately approved. The cumulative total of every service budget equals the budget for the council in Year 2. This too will be discussed, probably at great length. It may well be challenged, reworked and adjusted prior to finally being signed off. It may well lead to some budgets being cut in favour of other budgets for services considered essential, these being increased. February, Year 1. We're getting near the end of the financial year now, with outturned figures becoming more and more accurate. With the budget agreed, the council tax levels are discussed by councillors, set, and the process of printing and sending out council tax bills can begin. Unitary councils collect and keep all money from council taxpayers in the area. County councils, on the other hand, set a precept, i.e. they ask all the district councils within the county to include a charge on the council tax bill sent out by the district council for county council services along with their own charge. Parish councils similarly set a precept and ask the district council to collect on their behalf. March, Year 1. Any orders for goods and services to be used or received in Year 2 are raised and sent out to the suppliers. To make sure that the expenditure for these are correctly coded in Year 2, a prepayment is raised. Similarly, if the council has yet to receive an invoice for goods and services in Year 1, an accrual is raised. When the invoice is finally received in Year 2, the expenditure is coded back correctly into Year 1. Often, councils will raise orders for services such as utilities, where a number of payments are to be made over the course of the new financial year, in readiness for the 1st of April. Immediately they do, their new Year 2 budgets are updated to indicate that a commitment has been made, leaving a balance, if there is any. The accountants complete the necessary journal transfers to move authorised balances carried forward into Year 2. This includes capital projects. They will also be putting together their plans to close down Year 1 accounts, liaising with service managers and colleagues to agree who has to do what when ensuring availability of key staff in so doing. Every year, councils are required to submit financial and performance returns to many central government departments and quangos. Accountants will, therefore, liaise with service managers and collate the figures ready for the returns to be signed off and submitted. This extends to claims for external grants to support services, or new initiatives and significant claims to central government, such as that for housing benefit. April, Year 2. And so into the new financial year. We begin to deliver services in line with what was planned for Year 2 and endeavouring to keep within the new year's budget. Internal auditors will begin their cycle of work for the year ahead. They will examine systems and processes, carry out checks of transactions made, and report to service managers on what they find, with the reports also being issued to an audit committee for discussion, and, if necessary, questions raised with the service managers responsible. The work of the internal auditors will be reviewed by the external auditors. May, Year 2. Accountants and managers start the process of monthly budget monitoring. checking that the actual spending and income is in accordance with the budget as at this point in year 2, i.e. the profiled spend or income. If significant differences are identified, managers will have to determine why. Is this something that they were aware of? Is it because prices were higher than expected? Is it because of unexpected spending or closure of a service? For example, if there was lower income from car parks, was it due to a car park closure? Accountants will liaise with service managers or expect them to let them know of any significant budget monitoring issues. The Council's management team will periodically receive a budget monitoring overview report with any significant, unexpected items being highlighted for their attention. If significant enough, they may have to be raised at committee meetings with councillors. June, Year 2. As usual, managers and accountants keep an eye on their budgets, projecting the spending and income figures forward to check services are on track. July, Year 2. Service managers continue to monitor budgets, making adjustments and reporting as required up the management chain. The finance team work with senior officers and councillors reviewing the council's plans beyond Year 1, medium-term financial strategy. This will probably involve several planning meetings over the next few months and may well lead to new capital projects that will be considered and, remember, picked up around October, as previously mentioned. Accountants may well be asking managers over the course of the next few months to consider any issues that may affect their service budgets. For example, changes in legislation leading to increased demand on council services, unexpected and sustained falls in income that may affect the level of the service required in Year 3 onwards. It is important that service managers discuss any concerns with their accountant as early as possible in the financial year, in order that adequate time is allowed for consideration of the financial implications in time for budget setting from October onwards. Very often, service managers are asked to consider plans for making savings or income generation from Year 3 onwards. Some councils that rely on central government funding, i.e. they're not asset rich and or deliver expensive services, often have to do this in the face of threats to central government funding. Over the last few months, accountants will have been reminding service managers to clear any outstanding orders from Year 1, i.e. chase suppliers for invoices, or, if Year 1 orders were not received, cancel them and, in so doing, clear the accrual. The accountants are getting in readiness to close down Year 1 accounts. Once an invoice has been received, services should process them without any undue delay, as councils are required under late payment legislation to pay them within an agreed time, as this can adversely affect a supplier company's cash flow. Late payment of invoices can lead to the council incurring late payment interest charges too. Similarly, council services that send out sundry debtor invoices for services rendered should do so as soon as the service has been provided. The longer it takes to send them out, the more the likelihood that it will not be paid or take longer and be more expensive to collect. Ideally, income for services, or certainly goods supplied, should be made in advance. The accountants will advise service managers to mark invoices processed for payment clearly in some way to ensure that they are paid from the correct financial year. August, Year 2. What's the first job? Yes, that's it. Monitor the budget, actuals to estimates, and update the forecast. Accountants will be more than likely checking Year 1 service accounts in detail, completing journal transfers to move spending and income that may have been miscoded, moving budget money from one budget code to another, i.e. variance. Remember, this is all done to ensure that the council's accounts allow for a fair comparison between one financial year and the next, as important decisions involving service levels and people's jobs may well be made based on these. September, Year 2. Close down. The accountants will cross the T's and dot the I's for Year 1. This is close down. The final year-end figures are set out in reports to councillors, and the council's external auditors will visit to check that the accounts are accurate and present a true and fair view. In doing so, they will look at the systems and processes that produce the figures prior to signing the accounts off. If they have any concerns that the council fails to address, they qualify the accounts, i.e. they set out their concerns as to why the accounts do not, in their view, present a true and fair view. Once the accounts have been closed down, they are published on the Council's website. There will already have been a period of time when they are made available in draft form for members of the public to come in and review them, and ask any questions should they wish to do so. Of course, while the accountants are closing down year one, they and their service managers will still have been monitoring service budgets, re-evaluating the forecast, carrying out any journal transfers to correct errors or make adjustments, and generally ensure that the Council keeps within its financial plans for the year. October, guess what? We go through the whole cycle again. So, here are the key messages for you. If you manage a budget, you are accountable for it. Complete an official order for goods and services in order to raise a commitment and update your budget. Process invoices for payment as soon as they are received and make sure that they're matched to the original supporting official order. Otherwise, the budget will have been reduced by both the invoice and the order value, and the budget balance will look less than there actually is. When using credit or payment cards to purchase goods or services, collect the receipts and hand them into a person in your team who processes your transactions. Only process VAT invoices if the supplier states their VAT registration number, the Council's name and address, and the VAT rate on the invoice. Send out sundry debtor invoices for goods and services as soon as they've been supplied. Better still, in advance, or even collect the money in advance. Keep service accountants informed of any likely and significant changes in service levels well in advance of the budget setting period, in order that there's enough time available for background work and reports. Make sure that you code expenditure and income correctly. Don't just pick any old code within a cost centre. Remember, doing so makes a fair and accurate comparison of one year to the next almost impossible. That goes for VAT coding too. If the Council gets that wrong, it could end up with a very big fine from Her Majesty's Customs and Excise. Where possible, profile your budgets across the financial year, rather than spread them equally. This is far more helpful in allowing you to accurately monitor your budgets month by month. The alternative is having to make mental notes as to what to add on or take off. Check your budgets at least once a month, i.e. actual spending and income against budget spending and income. Where you are responsible for a large, high-risk budget with many non-staff payment transactions and a large team, a service that is historically not stable over the course of a typical year, this is essential and you'll probably need to keep an eye on budgets every week. If you identify a significant variance between actual and budgeted income and expenditure, find out why. Is it because your service used more or sold more than expected? Perhaps it's because prices were higher than expected. Maybe something unplanned happened. Maybe it's just because something's been miscoded. Find out and talk to your service accountant. It may just be a blip, or it may be a long-term issue that needs your urgent attention. Find out. When considering new projects, don't just think about the start-up and set-up costs. Will the Council incur any ongoing revenue costs? Do these revenue costs, taken with the initial capital costs, mean that the project's business case no longer stacks up? If a project does not contribute towards the achievement of a service or Council goal, ask why it's being considered or progressed. When building up a business case, it's far better to be conservative in your outlook. Anticipate higher costs and lower income than expected. Your project is then less likely to fail. Remember, your service is part of a larger organisation with many objectives and plans. If you don't keep a tight control over finances, then there's a possibility that the Council will fail to deliver one or more of its objectives. Look for unusual patterns in spending or income. It may be completely innocent and explainable, but it may also be an indication of fraud or error. Make sure that anyone who controls a budget and reports to you understands what is required of them, what they can and should do, and, of course, cannot do. Generally, read the Council's financial regulations, financial rules, or whatever they call them. Find the sections that apply to you, what you need to know. Aside from what we have worked through, make sure that you follow the rules about purchasing goods and services. When you need to go out to tender and when you don't. If in doubt, find out from someone before you go too far with your plans. If in any doubt about anything to do with finance, talk to your service accountant.